Morning, ladies and gentlemen. As right now we have more than 300 participants here, so let's start our webinar today. So I hope everyone is doing great during this challenging time, as provided that there are more cases increase in Cambodia. But it is a blessing for us that we have been vaccinated, and we really hope that this COVID-19 era will be over soon. So once again, thank you for attending our live webinar on Tax Audit and Proper Accounting Record, which is designed to support our audience on accounting records and update on tax audit regulation to prepare for tax audit in these changing trends. By the way, I'm Lim Chi Yong, Membership Executive of KICPAA, and I will be the MC throughout the course of this webinar today. Before we get started, I want to cover some housekeeping rules here. So first, our participants will not be able to speak or raise their question directly or verbally to our speaker. Instead, you will be able to write your questions into our Q&A chat room. And if you encounter any technical issue, please also drop your question in there. Our team will address it immediately. After the webinar, you will receive feedback from our team via email. So the form will be open for only 3 days only. And after you completed it, you will be able to download the slide presentation slot accordingly. And you will also receive the attend this webinar within 10 working days after completing the feedback form. So I would like to guide you to our agenda. Today, it is an honor to have Mrs. Saudali join with us. And we are also joined by 2 experts from Fii Associates to come and share useful insights and update on tax. So the first speaker is we will meet Mr. Ranvidya. Currently, he is a senior tax manager of Fii Associates and has over 8 years of experience in tax field and in leading company in Cambodia. And he will walk us through the topic tax audit update. And the second speaker, we will meet Mr. Song Chanthol, working more than 10 years of experience in tax compliance, advisory, and litigation in various industries. And currently, he is also a tax director of Fii Associates, and he will address on the topic proper accounting record to prepare for tax audit. So without any further delay, and our time is tight too, I would like to welcome and give this floor to Mrs. Sawadali, Acting Executive Director of KICPAA, to give her welcome speech. So please welcome Ms. Dali. Thank you.
Thank you, Dion. Very good morning, KICPAA members, ladies and gentlemen. I hope everyone is safe during these challenging times. I'm Dali Savot, Acting Executive Director of KICPAA. I'm very pleased to be here with you all today. And on behalf of KICPAA, I would like to warmly welcome and thank to our speakers and participants for attending the live webinar on the topic of tax audit and proper accounting records. Besides that, I would like to offer my gratitude to Fii Associates Co Ltd for your collaboration by sharing insightful tax experts for this webinar. Today I'm so excited to see many participants here, nearly 400. Before kick off the session, may I take this opportunity to brief you some about KICPAA And I also have an exciting news for those who wish to set up the accounting and auditing firm in Cambodia. KICPAA stands for Kampuchea Institute of Certified Public Accountants and Auditor. It's established by accounting and auditing law in 2002, and subsequently by the new law on accounting and auditing in 2016. The more important thing is that KICPAA is the only national accountancy body in Cambodia. KICPAA is recognized by our regulators in Cambodia, such as Accounting and Auditing Regulator, AAR, that former NEC, and SICSIS, Security and Exchange Regulator of Cambodia, NBC, National Bank of Cambodia, and also GDT, that I hope you all know, which means that once you become a KICPAA member, you are eligible to apply for and obtain this license from this regulator to provide the audit service to audit listed companies, banks, and microfinance institutions, insurance companies, and also get the tax license, tax agent certificates, respectively. Is also a primary member of ASEAN Federation of Accountants that we call AFA, and is an associate member of IFAC, International Federation of Accountants. And our vision is to be a recognized and trusted accountancy body in Cambodia by 2024. And we aim to uphold public interest by regulating and educating the professional accountants to the highest professional standard and code of ethics, and maintaining the confidence of the public in the profession. Team, next slide. Okay, so now it's time for me to share the good news for joining with us that KICPAA have on the screen. Next slide, please. Related to membership category and benefits which you are eligible and entitled to apply for. KICPAA have two main types of membership. One is individual member, and another one is a firm member, referred to entity. And for individual member, we have 5 categories of membership, which is the first one is active member as auditor, refer to auditor who set up the accounting firm and provide both accounting and auditing services. Second is active member as accountant for those who practice accounting and provide accounting services. For affiliate member and associate member, refer to those who are allowed to do a certain scope of accounting services. And the last one for individual is a student member. And please feel free to contact our KICPAA Secretariat team for detailed information which category that you are qualified for. Moreover, you can see the minimum benefits on the right-hand side of our slide for being our member, such as recognition by various regulators, as I mentioned earlier. And recognition by public, and you are eligible to apply for a tax agent, and also can join many seminars and networking events. Also, CPD program that we have a continued professional development program. And also updates on law and other standards related to accounting and auditing, and also other regulation related to accounting profession. Next slide, please. And we also have this one for firm member, that which is accounting and auditing firm. For auditing firm here can provide both accounting and auditing services, while accounting firm can provide a limited scope only on accounting services. Next slide, please. So under the new law on accounting and auditing, only KICPAA members are eligible to apply for accounting and auditing license. It means that if you wish to set up the accounting and auditing firm in Cambodia, you should register to be a KICPAA member first, and then apply for licensing from accounting and auditing regulators. Okay. Before I pass the floor to our guest speaker, I encourage all of you and all accountants in business, CFO and lecturers to apply for member. And should you need any assistance or more information about KICPAA as well as membership requirement, please contact our secretary team through the information on this slide. Thank you for your kind attention.
Thank you so much, Mrs. Sawatnali, for your warm welcome and this exciting news for our participant today. So for the interested audience, or if you have any question about KICPAA, please kindly contact to KICPAA Secretariat directly. You will provide you the contact info also at the end of this webinar. So let's move on to the next agenda. I would like to give this floor to Mr. Virya to share with us on the topic tax audit update. So please welcome Mr. Virya. Thank you so much.
Okay, thank you, Young, for giving me the chance to do the present here. So first of all, I would like to express my thanks to all participants and say good morning to everyone for attending this webinar. So for me, I am pleased to do the sharing regarding a very hot tax matter in Cambodia, which is tax audit. And I can see that there are many participants today because everyone is very interested in the tax audit matter in Cambodia. So next slide, please. Okay, so for my part, tax audit, I will walk you through on the 4 points. First one, I will share what is the tax audit and why all companies in Cambodia have the tax audit. And secondly, the types and procedure of tax audit. Third, penalties, which might impose in the tax audit process. And the last one is the hot issue that most companies face during the tax audit process. Next slide, please. Okay, so the first point is regarding tax audit. What is the tax audit? If our participant has the experience regarding the tax audit, he might know what is the tax audit. But for those who never experienced with the tax audit, might have the question, what is the tax audit? So before I provide the definition of the tax audit process, I would like to share that in Cambodia, when you invest or you set up a company, you will declare the tax under the self-declaration tax, meaning you can declare whatever you want. You earn 100, you can declare 10. You spend 10, you can declare 8, whatever you want. But during the tax audit process, the tax auditor will come to check whether you declare correctly or not. And they will impose penalty if you under declare or you overclaim expense for during your business transaction. So this is why the GDT conduct the tax audit on the companies or investor in Cambodia. So the first point regarding the tax audit is the purpose. The purpose of the tax audit is to cross-check whether the taxpayer who are the self-declarations comply with tax regulation or not, meaning the GDT want to check whether the taxpayer declare the tax correctly, they pay tax properly under the tax regulation in Cambodia. And if the tax auditor find out you did not pay or declare tax properly, they will impose penalty on the incompliance with the tax regulation. And during the tax audit process, you might have the question of what the tax auditor do during their conduct of the tax audit. So during the tax audit process, the tax auditor normally review your accounting record. They review your financial statements. They review your tax return that you submitted to the tax authority, and supporting agreements and supporting calculation, like you have the sale record, purchase record, tax on salary working, withholding tax working, and so on. And other documentation like rental agreement with your supplier. And lastly, who will conduct the tax audit? So the tax authority will conduct the tax audit on your company. Consists of enterprise audit department, like taxpayer department or tax branch. So this tax authority depends on the type of tax audit. So I will show you who will when the enterprise audit department conduct the tax audit, and when the like taxpayer conduct the tax audit. Next slide, please. Okay, so now we already know what are the tax audit and the purpose and what document the tax auditor check. So the next one is the type of tax audit. So in Cambodia, if you take a look at Prakas number 270 issued by the Ministry of Economy and Finance, there are two types of tax audit. First one is desk audit. Second one is site visit audit. So what are the difference between these two types of tax audit? The first one, desk audit. You can see that the word desk here means you work on the desk or the table in the office. So this type of tax audit, the tax auditor will conduct this tax audit at their office, meaning they will not visit your office. They will not have a meeting with you at your office, or they will not take a look at your factory or warehouse. They just review your tax return, which they think that there is abnormality with the tax declaration, or they pick up some high risk item in your tax return. So in this tax audit process, normally the tax authority will issue you the notice of or the letter require you to provide the explanation on particular item that you declare in your tax return with the supporting document and explanation in writing. And this tax audit normally conduct within 12 months after tax return submission. So for example, when you submitted the annual tax return in tax on income for 2020, so the tax auditor might conduct this kind of tax audit within 1 year, meaning it might be start from March 2021 to March 2022. So within 12 months after you submit your tax return. So during the process, you just submit the document and provide explanation in writing regarding the items that picked up by the tax authority for you to explain. And this kind of tax audit normally is conducted by a tax branch or the tax auditor from your taxpayer department. And the length of this kind of tax audits under Prakas 270 is up to 3 months after all documents are submitted to the tax auditor. And the second tax audit type is a site visit audit. So you can see the word site visit, meaning the tax auditor will go to take a look at your office, will take a look at your factory or warehouse to observe your operation and the business transaction at your office. And normally they review your normally they will review your whole business operations. They will review your accounting record, tax returns, and workings, legal document, and other documents. So it is this kind of tax audit scope is a bit bigger than the tax audit, because of the tax audit you have to provide explanation on particular items that were picked up by the tax auditor only. But for site visit audit, the tax auditor will review in a broader scope during the process. For the site visit audit, consists of limited tax audit and comprehensive tax audit. And I will share with you when the GDT conduct limited tax audit and when the GDT conduct a comprehensive tax audit, and what are the difference. Next slide, please. So under the Prakas number 270, the limited tax audit is normally conducted by like taxpayers department or tax branch. So if you are a like taxpayer, you submit and declare your tax return with like taxpayer department, or if you are medium taxpayer, you submit and declare your tax with the tax branch, for example, like Don Ping tax branch or Chongkamon tax branch. So when the GDT conduct the limit tax audit, they will assign the tax auditor from those tax branches to conduct the limited tax audit on your company. And under that Prakas, the GDT also specify the period for the limit tax audit as well. So the question is when the LTD, I can use the abbreviation like taxpayer department, LTD or tax branch normally conduct the limit tax audit for the current tax year or the year before current tax year. For example, now 2021. So the like taxpayer department or tax branch can conduct limit tax audit for 2020 or some months for 2021. And during the limit tax audit, the question is what kind of tax that the tax auditor normally cross-check and review. So under the Prakas number 270, the tax auditor review all types of tax except TOI, meaning tax on income. So in this kind of tax audit process, the tax auditor review your tax declaration, and they will impose a penalty only on the monthly tax and other tax besides tax on income. However, they also review your annual income tax to cross-check whether you declare properly during the monthly tax declaration or not. They do the cross-checks. And the limit tax audit is not the final tax audit, meaning if the light taxpayer department or tax branch conduct the limit tax audit on your company for 2020, in the following or in the future, the GDT will conduct another tax audit on your company, which is called comprehensive tax audit. So the one single period will be subject to tax audit twice, which is limit tax audit and comprehensive tax audit. So I would like to continue with comprehensive tax audit. The comprehensive tax audit is conducted by Enterprise Audit Department of the General Department of Taxation. And the period of this kind of tax audit is within 3 years before the current year. For example, now 2021. So the Enterprise Audit Department, EAD, normally conduct a comprehensive tax audit up to 2020, 2019, and 2018. So within 3 years before the current year, they might conduct a comprehensive tax audit for 2020, 19 or 18, or within the past 5 years or more than 5 years with clear evidence of tax avoidance. So if they find out that you avoid tax with clear evidence, the EAD might also conduct the comprehensive tax audit beyond 5 years on your company. And the tax that will be reviewed by the Enterprise Audit Department is all types of tax. So it includes monthly tax return and also annual income tax during the tax audit process. And you might have the question that your company might be subject to a tax audit twice for the same period, which is limit tax audit and comprehensive tax audit. The question is if the Enterprise Audit Department will reassess the same tax to limited tax audit or not. And if yes, are you required to pay that penalty twice or only once? So under the Prakas on tax audit process, when the light taxpayer impose particular tax, for example, a tax on salary, reassess tax on salary during their conduct of limited tax audit. And then when the Enterprise Audit Department come to conduct the comprehensive tax audit on your company, they also found out that your company under declare or underpaid a tax on salary. So they found the same mistake during their tax audit process for the same period. So under that Prakas, when you already paid the reassessed tax on salary in the limited tax audit for 2020, you are not required to pay this reassessed tax again for the comprehensive tax audit for 2020. So you will not pay a tax twice. And for comprehensive tax audit, it is considered final tax audit, meaning if the GDT conduct the comprehensive tax audit for 2020 on your company will not subject to any other tax audit again in the future for 2020. However, under law on taxation of Cambodia, in the one article, the GDT also mentioned that they will also conduct another tax audit, special tax audit on your company after comprehensive tax audit if they have clear evidence that your company avoid the tax. But I can say that in practice, based on my experience, I never seen this case before, because before you close the comprehensive tax audit case, the GDT work very carefully to review everything and collect all evidence to reassess tax. So in practice, for me personally, I never seen the GDT conduct another tax audit after comprehensive tax audit yet. Okay, next slide, please. So now you know what is the tax audit and what are the types of tax audit. And secondly, you might have the question whether all companies in Cambodia are subject to tax audit, subject to limit tax audit, comprehensive tax audit or not. Or you also might have the question that, for example, like this situation, COVID pandemic, you might have a question that now all your staff are working from home. So when the GDT conduct the tax audit, is it okay for you to delay that tax audit process or not? So under the Prakas 270 and other tax regulations, the GDT also provides the right to the taxpayer to delay the tax audit process as well. Under that Prakas tax audit Prakas, the taxpayer allowed to request for the delay of conduct of tax audit verbally for the period up to 10 days. So if you want to delay for 10 days, you can just request, do the verbal request by phone call or face-to-face meeting with the tax auditor. However, if your request for the delay up to from 10 days to 30 days, you are required to submit a written request to the GDT. So you need to prepare a letter and submit that letter to the GDT administrative staff or tax officer. And this is for the delay. And the second point is regarding the exemption from the tax audit process. So as you are aware, the GDT introduced the compliance status of the taxpayer in Cambodia, which they classify taxpayer into 3 categories. The first one is gold taxpayer, secondly is silver, and thirdly is bronze. And Chantal will specify and provide detail how you get a gold certificate, how you get a silver certificate, and how the GDT, what are the criteria that the GDT used to assess whether you are gold or silver. So for tax audit purpose, the taxpayer who hold gold certificate normally exempt from the tax and limited tax audit. So you are not subject to tax or limited tax audit. And for comprehensive tax audit, your company will be subject to this kind of tax audit every 2 years. For example, you might subject to tax audit for 2018 and 19. And then after that, you will be subject to tax audit again for 2020, 21. which might be conducted in 2022. And the last point is a silver certificate. So under that particular regulation, the taxpayer who hold silver certificate is exempt from tax audit and subject to limited tax audit once a year. So you might be subject to limited tax audit for 2018, 19, 20. But now 2021, you are not subject to limited tax audit yet. You need to wait for 1 year. And the last one is comprehensive tax audit. Also, your company is also subject to comprehensive tax audit every 2 years, similar to those taxpayers who hold a gold certificate. So this is the delay and exam on the tax audit process. Next slide, please. And the next one is regarding the procedure of the tax audit process. So you will you might have a question what normally the taxpayer and the tax auditor do during this tax audit process, and what are the steps that the taxpayer should take during the tax audit process. So normally the tax authority, either the EAD or like taxpayer department or tax branch, when the time come to conduct the tax audit, those guys normally issue the notice of tax audit. So in that notice of tax audit, the tax auditor normally specify when they conduct the tax audit on your company and for what period. So after obtaining the notification on tax audit, taxpayer is required to submit requested document based on the required document list attached to the notice of tax audit. So in that particular list, the tax auditor, you can submit the document based on that list. The document can be the tax return, including monthly and annual tax return, registration document, bank statement, financial statement, and other workings and agreements and documentation. So after submitting those initial documents, the tax auditor normally review those documents and information. During their review, they might have other questions and might also require you to submit additional document, which is case-by-case basis, on the case-by-case basis. So after review everything and hold a meetings to ask you or interview a taxpayer, the utility will conclude that you underpaid tax at which amount. So they will normally issue the notice of tax reassessment specifying the types of tax that you underpaid and the penalty that you are required to pay for your underpayment of tax. So under the law on taxation and also the tax audit practice, taxpayer also have the right to protest against the notice of tax reassessment issued by the tax authority. So under that regulation, if you disagree with the tax reassessment, you are allowed to submit objection letter within 30 days after obtaining the notice of tax reassessment. And if you fail to submit the objection letter within 30 days, you are considered agreeing with the tax reassessment. So you, in the practice, as the finance manager, accounting manager, who take care of the tax matter of your company, you have to be very careful with the deadline of the objection letter. So you have to ensure that you submit the objection letter within 30 days if you disagree with the notice of tax reassessment. However, if you agree with the notice of tax reassessment and accept that you really underpaid tax, you can process the payment for the reassessed tax and other penalties by the bank. And for the protest case, the tax auditor normally review your objection letter after receiving this type of letter, and then they will ask you to provide additional document. They will hold more meetings with you to further clarify your objection basis and check your additional document. So after this type of process, the GDT or the tax authority will issue the revised notice of tax reassessment. So for the revised notice of tax reassessment, for some items you might be agree with the tax auditor. On the other hand, some items you might not agree with the tax auditor. So you still want to protest against for the revised notice of tax reassessment. So under the law on taxation, you are allowed to submit another objection letter against the revised notice of tax reassessment to the and asking the GDT to transfer this tax audit case to other tax officer or authority, tax authority teams, which is litigation bureau under the Department of Legislation. So the litigation bureau will act as the arbitrator to facilitate your objection with the reassessment of the tax auditor. So they will interview the tax auditor and review the tax reassessment done by the tax auditor. At the same time, they also will interview you and they will review your document, your objection letter. So in conclusion, the litigation bureau act as arbitrator or as the judge in the at the court to make the decision. So after they review everything, the litigation bureau will come up with the final decision of the GDT. They will remain some reassessed tax the same, or they might also remove some reassessed tax from the notice of tax reassessment. In practice, in some cases, the taxpayer might agree with the final decision of the GDT, which is done by litigation bureau. In some cases, the taxpayer might not agree with the final decision. So in case that they agree with the final decision, they can process the tax payment to the GDT via the bank account. In another case that they still disagree with the GDT final decision, they can submit another objection letter to the Ministry of Economy and Finance, requesting the Ministry of Economy and Finance to find solution for this tax audit case. So under the tax law, if you still disagree with the final decision of the GDT, you can submit your objection letter to find a solution to the Tax Arbitration Council. So this particular council is chaired by Deputy Prime Minister, Minister of Economy and Finance. So you can submit this letter to the Ministry of Economy and Finance. After obtaining your letter, the working team of this council will review your document. They will hold a meeting. They will review everything similar to litigation bureau. And then after that, they will come up with the decision whether they agree to remove reassess tax, or they agree to keep some and remove some, something like that. So when they issue their decision, in some case, again, some taxpayer agree, some taxpayer disagree. But from my experience, I never seen that the taxpayer disagree with the final decision of Tax Arbitration Council. However, if in the future, if some taxpayers still disagree with the final decision of Tax Arbitration Council, they are allowed to submit their protest to the court, which is in practice, I can say that I never seen this before. So this is the whole process of the tax audit. And I would like to clarify that it is not for all companies to go through this tax audit process, because some company, they agree at the beginning that they made a mistake and underpaid tax. So when the GDT issue notice tax reassessment, they agree to pay tax at that stage. So they don't have to submit objection letter. In some other case, the taxpayer agree to pay tax and other penalty based on the revised notice tax reassessment. And some case they agree at litigation bureau stage, or in the rare case, they agree to pay the tax at the Tax Arbitration Council stage. So again, it does not mean that all company or taxpayers are required to go through all this process. It depends on the case. Next slide, please. Okay, so now you already know what are the types of tax audit and the process of the tax audit. And the next one is regarding the penalties. You might have a question, if I underpaid tax, so what kind of penalties I will pay to the GDT or the tax authority? So under the Cambodian law on taxation, the penalties for the tax audit process depends on your company compliance with the tax law. So if your company is considered committing negligence for your tax declaration, you will subject to the additional tax, which is penalty at 10% and interest on the underpaid tax at 1.5% per month. So the question is, when do I consider as committing negligence? So under the Cambodian tax law, if you paid tax at 10% of the total amount of tax payable to the GDT, you are considered committing negligence. For example, you under the Cambodian tax law, you are required to pay withholding tax $100. However, you underpaid the withholding tax $9 during tax return declaration. So in this case, you are considered committing negligence. So in the tax audit process, the tax auditor will impose additional tax, which is a penalty at 10% of the underpaid tax, which is 9 in our example. The second case is serious negligence. So under the tax law, you are considered committing serious negligence when you underpaid tax of above 10% of the tax to be paid under the tax law. In our example, withholding tax again, you are supposed to pay a withholding tax $100 to the tax authority. However, you you paid only 80 US dollars, so you underpaid 20. So you underpaid 20 here mean you underpaid 20% of the total tax amount payable to the GDT under the tax regulation or withholding tax regulation. So in this case, you are considered committing serious negligence. So the additional tax, which is penalty, will be imposed at 25% of the underpaid tax amount, and the interest will be imposed at 1.5% per month under the tax audit practice number 270. And the third one is regarding the unilateral tax reassessment. So under the tax audit practice and law on taxation, the GDT also mentioned about unilateral tax reassessment. So the unilateral tax reassessment normally will be imposed if the taxpayer is found to commit tax avoidance. So in that podcast, if you take a look at that podcast, you will see that when you are considered committing tax avoidance. So the tax avoidance happen when you do not maintain accounting record, or you maintain false or fake financial statement or accounting record, and you do not cooperate with the tax auditor during the tax audit process, meaning you do not submit the requested document required by the tax auditor. You do not meet with the tax auditor as requested by them. So you do not cooperate. So in this case, you are considered committing tax avoidance, and you will be subject to unilateral tax reassessment with the penalty rate at 40% on the underpaid tax, and the interest is 1.5% per month. The last one is obstruction of tax law implementation. So for this kind of penalty is 2 million if you are found to commit obstruction of tax law implementation. If you take a look at the law on taxation of Cambodia, in particular one article, the GDT also mentioned when you are considered obstruction of tax law. So I can give you a few examples for this one. You are considered obstructing implementation of tax law when you do not maintain a proper accounting record. You do not issue the invoice based on the tax regulation, and you did not declare and submit tax return on time, among other things. So when you commit this kind of thing, you are required to pay this penalty at 2 million real, which is 500 US dollar during the tax audit process. Next slide, please. Okay. So now you are already know what type of tax audit and the penalties and the tax audit process. To conduct the tax audit. So if you take a look at that podcast, you will see that the purpose of tax audit is to ensure the transparency and effectiveness for tax collection and payment. So the GT try to ensure the transparency, but during this process, the GDT also provide incentive or help some taxpayers who have difficulty in paying the reassessed tax by allowing them to pay the tax liability in installment. So, for example, if the reassessed tax amount is 100,000 US dollar, and you have now you currently you have financial difficulty, so you do not have 100,000 US dollar to pay to the GDT. The GDT also allows you toward this amount in installment by fulfill some condition. So in order to pay the reassessed tax in installment, you are required to submit a request letter to the GDT with supporting document like a latest patent tax, notice tax reassessment, financial statement, bank statement, and other document to prove that you are really in the hardship situation regarding the financial matter, and also provide the detailed context and information of taxpayers or representative. And the GDT normally they will review your request and check and the approval based on the various conditions. So it means that the GDT will not approve every request. They will approve on the case-by-case basis. So they, in order to approve your request, you need to complete your tax registration update with the National Tax School. And the GDT also analyze your financial ability to settle the tax liability based on your financial statement and bank statement and other documents. And they also review the tax liability amount. Is it significant or it is a small amount? And they also review your tax compliance status, whether you have a good history regarding the compliance with tax law, or you have a not good history with the compliance of tax law. And the last one is installment stage. So under that particular notification, you are allowed to pay the tax reassessed tax in installment for maximum periods of 3 years. So for the first year, you are not required to pay interest, but for the second year, you are required to pay interest for the unpaid reassessed tax amount at the interest market interest rate calculated by the GDT. And for the third year, you are required to pay additional interest at 2% per month on the unpaid amount. Okay, next slide, please. Okay, so this is the very interesting point for taxpayer in Cambodia who might face during the tax audit process. So I provide the summary of hot issue based on our experience during the tax audit process. The first table, the first box in the yellow one, you can see that the income tax return versus financial statement. So normally, some companies, the income that they declare in the tax return is not reconciled with the financial statement. So the tax auditor normally they perform a reconciliation between the income amount in the tax return and financial statement. So if the financial statement is higher than the tax return, the tax auditor will assume that you underpaid under declared revenue. So under declared revenue means you under declare tax on revenue, which might be VAT and tax on income. Secondly is expense. So some companies also have their expense declared in the tax return is not reconciled with the expense in their financial statement. So if they do not have the proper clarification with enough supporting document, the GDT might deem that you under declare a particular expense, for example, rental. They might cross-check the rental expense in the income statement and compare to the rental expense declared in the tax return. If the rental expense in the tax return is lower than the expense in the financial statement, the GDT will assume that you under declare rental expense and you underpaid withholding tax on that expense. And the third issue that normally the taxpayer face is the capital. So some company, they might inject capital, or they might decrease capital without register with the Ministry of Commerce. So normally the tax auditor will review your balance sheet in the past year with the current year balance sheet. So if there is a changing in registered capital, they will ask you to clarify why there is such difference. If you do not provide a supporting document and you did not register that increase or decrease in capital with the Ministry of Commerce, the utility or the tax auditor might assume that you under declare income, or you might obtain loan as your capital, or other thing, and they might impose a relevant tax for this one. That's why you need to be careful with your registered capital to ensure that if there is fluctuation of capital, you need to register with the Ministry of Commerce. Or if you there is the fluctuation of capital, but the amount is still below the registered capital, you need to prepare supporting document with a proper justification to explain the tax auditor in the future. And the next point is regarding retained earnings. So if your company is not audited by external auditor, or you declare tax on income based on audited financial statement, for the retained earning issue might be no. But for some other companies, they declare annual income tax based on unaudited financial statement, while they submit audit report to the auditor, tax auditor, for review. So the retained earning is different. So when the retained earning different, the tax auditor might ask you the question, and they might assume that you might under declare income, or they might assume that you pay dividend to your shareholder after they see the fluctuation of retained earning between the annual tax return with your audit report, or with all the last year retained earning with the current year retained earning. And the next one is income collected on behalf or reimbursement. So this issue is mainly about the logistic company. The logistic company, some international logistic company might collect the income on behalf of the parent company. So when they collect the income on behalf of the parent company, the tax auditor might assume that this is their income and impose tax reassessment on this particular issue. And they also might reimburse from their customer during their service. For example, they might pay custom duty, THC fee, low fee on behalf of the customer, and after that they reimburse that expense from their customer. So when they reimburse, the tax auditor might assume that this reimbursement is the logistic company income. And the next one is related party transaction. So as you are aware, in October 2017, the GDT introduced the transfer pricing rule in Cambodia. So after that introduction of that TP rule, the taxpayer normally face a lot of issues if they have a related party transaction, because if they do not have a proper enough supporting document to prove that their related party transaction were done at arm's length, the GDT will reassess tax on that transaction. And the next one is director salary. So this kind of issue still faced by some tax payer in Cambodia. At some tax branch still reassess director salary because some director who is the owner of the company do not receive the salary from the company because they are shareholder. But from the tax auditor point of view, when you are the director of the company, you are supposed to receive the salary and subject to tax on salary in Cambodia. And the next one is regarding cost of goods sold. So it is mainly the issue of the trading company and the manufacturing company. Normally, the tax auditor compare the cost of goods sold that you declare in the annual income tax return with your income statement. So if the two amounts are not reconciled, the GDT might disallow some expense or might assume that you under declare revenue in your annual tax declaration and impose relevant tax. The last one is improper accounting record and supporting documents. This is the issue of the taxpayer who has a poor internal control. So when you do not prepare a good proper financial statement, for example, you do not adopt accrual basis for maintaining your accounting record, or you do not recognize expense or income in the correct period, and you do not maintain a supporting invoice for your expense, this is a big issue for you during the tax audit process, because under the Cambodian tax law, the burden of proof, meaning if you disagree with the tax auditor tax reassessment, you need to provide evidence to prove that their reassessment is not correct. So if you do not prepare proper accounting record with proper supporting document, you will face this issue in the future tax audit. And Chantol will go in detail regarding the proper accounting record under Cambodian regulation in the next session. And the next hot issue is regarding the gray area. If you experience with the tax process or tax declaration in Cambodia and tax audit process, you will know that some particular regulation is still not clear whether this is subject to tax or not. And I can say that it's not only in Cambodia, but other countries also face the same issue, that some particular tax regulation are not clear. So from tax auditor point of view, they try to collect tax, so their interpretation is different from the taxpayer. The taxpayer point of view is try to save or reduce the tax expense, so they tend to interpret that that particular gray area, applying that that particular transaction is not subject to tax. So this is also the common and hot issue faced by the taxpayer during the tax audit as well. And the next one is regarding the industry that have the tax audit, big tax audit problem in Cambodia. The first one is airlines. So if you are from the airlines company, you might see that there is a lot of argument between you and the tax auditor regarding the recognition of income on air ticket and the reassessment basis for specific tax and tax on income on the sale of air ticket. And now the GDT has not issued the guideline or the regulation for the airline industry yet, so it's still the hot issue during the tax audit process for this kind of industry. Secondly, logistic company, it's the same to airlines. There is no particular clear guidelines on the logistic company yet regarding the income collected on behalf of the parent company and the reimbursement collected from the customer. Still the same issue. And the next one is manufacturing companies. From my experience, the tax audit process for the manufacturing company also pose a lot of tax issue if the taxpayer did not prepare proper accounting record and have supporting document. And the last one is the group companies, meaning your company and is from a big group of companies. For example, the parent company is in the US, and the parent company set up various subsidiaries in various countries, in Cambodia, in Thailand, in Japan, and some other countries. So when those group company have transaction between each other, they are required to do that transaction at arm's length, meaning they have to comply with a transfer pricing rule that I just mentioned a moment ago. So the last box is how now you are aware of the hot issue in during the tax audit process, how you mitigate the risk, and how you reduce the tax exposure during the tax audit process. First one, like I mentioned, you are required or you should maintain proper accounting record. If you are not required to have your financial statement audited by external auditor, at least you have to adopt accrual basis, simple accrual basis for your accounting record. And secondly, you should maintain supporting document for every transaction that you do with your customer, with supplier, particularly with your related party. And the next one is good tax planning, meaning as the investor, when you want to invest in particular project, you have to properly plan your investment. One of the planning is the tax. Besides financial planning, you need also to plan your tax properly. You need to estimate, or you need to review whether there is any tax risk and in your project. So if there is a tax risk, how can you cope with that tax risk, or how to mitigate that tax risk? This is the tax planning. And the last one is professional tax advisor. So like our firm, we are the professional firm that provide the tax consulting service and compliance service to the customer for their tax declaration as well as the tax planning. So in the future, if you have any issue during the tax audit process, or during the your investment project, you can engage us to provide the consulting or the assistance in your tax audit process and tax planning as well. So I think that's all for my part, and I am very thankful for all participants. I think 500 participants, a big number, for your time attending this webinar. So I would like to give the floor to Chantal, who will share about proper accounting record and Cambodian regulation. Thank you.
So thank you a lot, Mr. Vidya, for this sharing on the update and also the walkthrough. It is really useful to be aware of. Well, before we get going, I want to remind our audience again, if you have any question for Mr. Vidya, please drop it in the chat box. Our team will facilitate on collecting them. And once again, I want to remind you that our participant will receive the feedback form, and after you complete it, you will receive the presentation slide. So thank you so much. For the next agenda, I would like to welcome Mr. Son Chanto. He will walk us through the topic, proper accounting record. Please welcome. Thanks.
So let me say thank you to Vidya, and also thank you to Jiyong. Good morning, ladies and gentlemen. My name is Chantal from Fii Associates. Thank you so much for joining us today with this webinar. I hope that you are doing good and staying safe. Today, I'm really happy and excited to be here. Today I will talk about proper accounting records. But before we start our topic, please let me say thank you to KICPAA, who helped support this webinar happens and arrange all the necessary platform for the sharing today. So today we're talking about proper accounting records. In our language, we call it and if we talk about proper accounting records, it is also important to talk about tax compliance. So we will go through all of this together today. Next slide, please. So our agenda today is to talk about criteria for improper accounting records and tax compliance and incentives that you will receive as a taxpayer if you receive those certificates from the GDT. And the last one is that we will talk about how you will get those certificates from the GDT. We'll talk about the application process and procedures and how you can get it. Okay, next slide, please. So in the broadcast issued by the MOEF, it defined the definition of accounting records. So accounting record refers to sets of accounting records and documentation in accordance with the requirement of the GDT and accounting standards determined by the MOEF. So as you can see, account records by definition under the broadcast refers to not only the records and documentation that determined under the accounting standards of the MOEF, it also refers to the accounts and documentation as required by the GDT. This may refer to, for example, loan agreements, VAT invoice. You issue the VAT invoice as determined by the VAT regulations. You submit all notifications to the GDT. So all of these can be said as account records for tax perspective. So if you talk about proper accounting records, we need to look first at what is improper accounting records. So under the broadcast by the MOEF, it has outlined certain criteria to determine on improper accounting records. One of those is that if you do not keep accounts and documentation as required by the tax law or by the accounting standard. And the second one is if you do not issue sale invoice under these four articles, Articles 77, 78, 79, and 98 of the law on taxation. If you look briefly at these articles, it is about VAT invoice criteria, the keeping of all sales invoice that you have issued, and the keeping of all invoice that you have received from your suppliers, and also the requirements to keep books of accounts and other documentation for submission to the GDT upon request. And the third one is if you conduct serious negligence as stated under Article 126 of the law on taxation, and that means if you underpaid taxes more than 10%. And the first one is if you engage in tax evasion as described by Virat earlier in his presentation. And the last one is if you do not have audited financial reports in case you generated annual turnover more than $500,000. So these are the criteria for improper accounting records. So if in case that you do not commit any of these things, you cannot say automatically to yourself that you have maintained proper accounting records. So in order to confirm that you have maintained proper accounting records per tax law under the GDT, you will have to submit application to the GDT. And the question is, why do we need to do that? So we will answer that in the next slide. So next slide, please. So like I say, if we do not commit any of those criteria under improper account records, we cannot say to ourselves and claim to ourselves that we have maintained proper account records and enjoy tax incentive under the tax law. So the tax law say that if you have maintained supporting records, you will be exempted from minimum tax. And what it means is that if you generate a tax loss in certain years, you will have your repayment of tax on income as credit to be used in the next TOI. So that means when you calculate your TOI, you do not have to calculate your minimum tax. So that is the incentives that you will have under the proper accounting records. So like I said, to confirm that you have maintained proper accounting records, you will have to submit the application to the GDT, and the GDT will review your applications. The application will valid for 2 years. So just in case that the GDT issue the response to you saying that you do not have maintained proper account records, the law say that you can request another application to the GDT to review their decision again to see if it is correct or not. So if, let's say, you submit the application to the GDT to request for confirmation that the company have maintained proper account record, and the GDT says that you do not have maintained proper account records, then you can request again to the GDT. So next slide, please. So like I say, when we talk about proper account records and improper account records, we also need to talk about tax compliance. So these are the criteria under the tax law that determine criteria in order to judgment if a taxpayer has complies with the tax regulation. There are 12 judgments criteria, and total point is 20. So I will not go through all of these in detail today. But if if your total score is between 16 and 20 out of these 12 criteria, you will be considered as gold compliance. So if your total score between 11 and 15, you will consider as silver compliance. And if the score is between 1 to 10, you'll be considered as bronze compliant. So next slide, please. So why do we need to request to the GDT to provide us the status of either gold compliant, silver, or bronze? Because if you receive those certificates, you will receive lots of incentive under the tax law. And for gold certificates, the incentives are that you can request a VAT refund up to $125,000 without no VAT audit. This audit will be exempted. Limited audits will be exempted. Comprehensive audit will be conducted once every 2 years. So for those of you who have experienced tax audit, like Vidya mentioned, and also you know how resource consuming it is. So you should know that how important it is to have gold compliance certificate or silver compliance certificate from the GDT. So how can you get this gold certificate from GDT? The answer is that you can get gold certificate from the GDT for 2 options. One is that the GDT will issue to you directly, like they did in 2017, or you can request it to the GDT to give it to you through applications. And the certificates will be valid for 2 years. And the incentive under silver certificates, when you score between 11 to 15 points, the incentive is that you can request a VAT refund up to $15,000 without no VAT audit. This audit will be exempted. limit audit will be conducted once a year. Comprehensive will be conducted once every 2 years. And you can request this certificate, I mean silver certificate, from the GDT upon your request. And the same as gold certificate, the validity is for 2 years. So these are the incentives under the compliance certificate issued by the GDT. For bronze certificate, when you score between 1 to 10, bronze certificate will not enjoy these incentive. It will be the same as normal companies that do not have certificate from GDT. So next slide, please. So I think that's all from me for proper account records and also tax compliance. So our last slide here is about our context. So just in case you have any questions or need any assistance, you can contact to our partner, managing partner and CEO, Bong Sida, and Bong Chanthon, our partner, and Bong Maraz, our director on assurance. So if you have any assurance questions and need any assistance in this service, you can contact these 3 people. And if you need any assistance on technical accounts, you can contact our managing partner, Bong Kim Hin. Or if you have any issues related to business and finance and everything, you can contact our group business development director, Bong Lina. Or just in case you have any questions on tax, especially on proper account records and also tax compliance and other works like tax audit, you can contact to our managing partner, Bong Vidain, or you can contact directly to us, to Vidya or me, which we have provided our details in our slides. So again, thank you so much, ladies and gentlemen, for joining us today, and really appreciate your time and attention. Please feel free to ask us any question, and we will try our best to answer your question. So again, thank you so much. Please, I wish you the best of luck and stay safe in this COVID pandemic. Thank you.
Thank you so much, Mr. Chanthol, for these practical tools that you have shared with us. So they are really useful for our participants today. Believe that our audience has so many questions for our speaker to clarify. So as our time is so tight, I want to give this floor to Mr. Vidya and Mr. Chanthol to address participant questions in this Q&A section. So please welcome Mr. Vidya.
Okay, thank you, Yong, for let me in again. So I have received a lot of questions for the tax audit part. The first one is in case there is a mistakenly over declaration in profit, will it be concerning issue from tax authority? I think for this one, when you over declare profit, meaning you over declare tax on income. So the over declare a profit here might arise from over declare revenue. So when you over declare revenue, means you over declare VAT, you over declare 1% prepayment, and you over declare a tax on income. In this case, if you have a proper supporting document, you can request the GDT for to amend your tax return and requesting the overpaid tax as your tax credit. In other case, you over declare profit. In some case, you might I think over declare. Yes, I think that's it for this question. You might over declare income. So in conclusion, if you over declare profits, you over declare tax, and there is no issue from the tax authority. But in order to claim back the overpaid tax, you need to submit a letter amending your tax return and requesting the tax credit for the overpaid tax. And by providing the sufficient supporting document for that. The second question is for tax tax audit, why not classified by desk audit, limit audits, comprehensive audit, and why classified by desk and site visit audit? This is new for me. This is the based on the tax regulation. So the classification that I put in the slide is based on the Prakas on tax audit number 270 issued by the Ministry of Economy and Finance. So it is mentioned in the regulation. The third one, do tax authority conduct computer-based audit. As you are aware, the GDT has just introduced the e-filing system in Cambodia. So for the time being, honestly, we are not aware how the GDT conduct the tax audit for the tax return that was submitted in the e-filing system. How they extract the tax return, is it and how they review? We are not aware about this as well. But I think because the GDT adopt the e-filing system in the future, it may be they also conduct the tax audit in their system as well, reviewing the tax return in the e-filing system. But for the time being, they still review the hard copy that the tax payer submitted to them. Next question, how long does it normally take for limited tax audit and comprehensive tax audit? For this one under the Prakas tax audit Prakas, it normally takes up to 6 months if the completed document and information were submitted to the tax auditor. Next one, after finish the tax audit by the GDT, how long the GDT will come again for the next audit? As my experience, after finish tax audit, they will come again after 2 or 3 months for the next audit period. So this is this question regarding the audit program of the GDT, and I cannot generalize that when the GDT conduct the tax audit again, it based on the internal program of the GDT. But from my understanding, the GDT set up the audit tax audit program based on the risk of the taxpayer, the risk of incompliance. So the GDT normally evaluate your company with how compliant your company is. So if you are not very compliant, the GDT will classify you as a high-risk taxpayer, and they will conduct the tax audit very often on your companies. Did you experience in late site visit or late final like the case from the tax auditor, both limit and comprehensive audit? Is there law of procedure that owner of the company can understand this and evaluate the performance of tax auditor? So for us, we have many ongoing tax audit process, and at the same time, we also have the new tax audit process, and also we close many some tax audit process for our clients recently. And for the procedure of tax audit, you can refer to the tax audit Prakas number 270 for the process, the types of tax audit. You can refer to that particular Prakas. And also there is another Prakas, if I'm not mistaken, regarding the procedure for submission of the objection letter, which is number 1470, if I'm not mistaken. In that particular Prakas, you will see how you submit the objection letter, what will be the content and supporting document of the objection letter. And for the evaluation of the tax auditor work, I'm not so sure what do you want to ask, but I think you want to evaluate whether the tax auditor tax reassessment is correct or not. So that's why we are here. We help you to evaluate the tax reassessment of the tax auditor, whether they reassess their reassessment based on the tax law or not. And we also assess your compliance status, whether you paid tax or not, and you have a supporting document or not. So to win the tax reassessment, we need to evaluate your compliance status and the supporting document. If you have proper supporting document to prove that you did not under declare tax, the GDT will remove that tax reassessment from the notice tax reassessment. And the next one is if the law on taxation. I think this question is quite long, and it's not regarding to the tax audit. For this one, this question is that the participant want to ask in Cambodia there is a threshold for a taxpayer to declare tax, and why the tax law require the company in Cambodia to withholding tax on the service payment from the supplier in Cambodia whose income is below the threshold mentioned in the tax law. The participant also mentioned about personal income tax in Cambodia. I can make a quick response that currently in Cambodia there is no particular regulation on personal income tax yet, and the threshold normally the GDT provide that a threshold for the registration or classification of the taxpayer in Cambodia only. It's like a small taxpayer, medium taxpayer, and light taxpayer. But for the individual businessman whose income below that a particular threshold are also required to pay tax in Cambodia. And this is the requirement under the Cambodian tax regulation. So the non-resident taxpayer and the individual businessman whose income is below the threshold are required to pay tax via the withholding process, meaning when the company or taxpayer do the business with those guys, they are obliged to withhold the tax from them. And this is based on the tax regulation. And
yeah.
Yes.
I have a few questions from our audience on proper accounting records. So please let me try to clarify questions. So question number one, could I please clarify if the exemption on limited and comprehensive audits for gold and silver compliance status means that the gold and silver taxpayer are permanently exempted from the audits, or audits are just deferred as later dates? So gold compliance certificates and also silver compliance certificates are valid for 2 years. So if you receive a gold certificates for 2020 and 2021, so that means that financial year 2020 and 2021 will be exempted from limit audits and also desk audit. It does not mean that you will be exempted forever. It's only exempted for the 2 years that's stated in the compliance certificates. And another question, if the company received gold certificate, can we consider that the company is having a proper accounting records? This one, I can say that if you receive gold certificate, you cannot be entitled to have maintain proper accounting records. As you can see in the criteria for determining tax compliance, gold, silver, and bronze, there is one criteria about maintain proper accounting records. So that is for two points, as I remember. And if you receive a score between 16 and 20, you'll be considered as gold. So that means even if you do not maintain, even if you do not obtain the scores on that criteria, maintain proper accounting records, you can also be considered as gold status. And in practice, we have seen that certain companies have received gold compliance certificate from the GDT, but they cannot receive proper accounting records, because these two incentives are provided separately and at forecast. For gold status, you receive, you will exempt it on tax audit, VAT refund, something like that. And proper accounting, you will receive incentive and the minimum tax exemption. So the short answer is that if you have received gold status or silver status, it does not mean that you have maintained proper accounting records. You need to request to the GDT separately. And another one is how to record properly on account receivable for insurance broker company match with tax declaration. And another one is based on law, they require proper account record, they require booking and accrual, for example. But for tax declaration by e-filing require invoice, we can see that these figures are different. So when the tax auditor use method to compare between financial statement and tax declaration, they must be different. So do you think that taxpayer can debate on this? So I will combine these two questions together. Our law says that we need to prepare our bookkeeping based on accruals, which we adopt accounting standard determined by the MOAF. So it will be on accruals basis. So sales incomes, either brokers or insurance, we will recognize or issue the invoice based on actual sales that we have. But for recording perspective on ARs and collections, it would be different. For example, you sell this insurance premium to one company in Thursday, in today. So, but they will pay you the money in the next week or next 2 weeks. So it will be different. And another point is that if you compare between monthly tax return and annual tax return, of course it will be different. You cannot compare between total purchase during the year that you declare on a monthly tax basis to actual expense that you will record under the income statement for TOI perspective. For example, let's say you buy an asset, you buy a computer, you buy a car. So you will record as you purchase the car, for example, let's say in April or in May, but you will declare in your e-filing return for monthly tax, you will as you buy the car and you buy the computer, but in your records for financial statement, you will record it as asset, and you will claim depreciation, not expenditure, but you will claim depreciation in income statement. So they will not be the same, and they will apply to certain expense also, like accruals and provisions. So it will be different. So we can justify this to the tax authorities when we have the audit. So the answer is very clear. You can debate it, you can prove it, you can explain to the tax authority, and these issues are not really complicated. If you have supporting document, then you can prove to the tax authority, and that's quite easy. Okay, I think that's all for me from React for now, because that is the question I have. If you have any questions on tax audit, then you can continue with you.
Okay, thanks you, Thor. And now we have also other question regarding the tax audit. The next question: if my company have a gold status certificate and qualify accounting record, so what kind of GT audit will conduct to my company? So based on my sharing and the Cambodian tax regulation, if you have the gold certificate, you are exempt from the tax audit and limited tax. And the comprehensive tax audit will be conducted in every 2 years. For gold, next question, for gold certificate, let's say company A get gold certificate in 2021 for the period 2019-20. The last comprehensive audit was 2018. My question: if in 2019 and 2020 is exempt from comprehensive audit, only 2021 will start again. So when you obtain the gold certificate, your company is not exempt from the comprehensive tax audit. But the thing is that the tax auditor or the GDT will conduct comprehensive tax audit in every 2 years. So 2019 and 2020 will be subject to a comprehensive tax audit, maybe in 2021. And then for 2021 and 2022 will be subject to comprehensive tax audit in 2023. This is what that incentive means. It does not mean you are exempt from comprehensive tax audit. You are only exempt from desk and limited tax audit only. The next one is a company have, this is not really relevant to the tax audit. A company have a spare room in the building and they let their shareholder use it for accommodation, including water and electricity. And the shareholder also not taking any salary. My question is there any risk for this situation? So the risk here also depends on whether on the business objective of your company as well. If your company is a condominium and you rent the condominium room to the customer, so provision of such a room to shareholder is considered a taxable supply, which is subject to 10% VAT, 1% prepayment, and TOI. However, if your company is not a real estate company who has a condominium or accommodation building, when you provide such a spare room to the shareholder, I think under the new tax on income Prakas number 098 issued in 2020, there is one particular article mentioning about a taxable income. When you provide the room as accommodation for free to your staff or to the third party, such a free room is considered the taxable income of the company. So this might subject to a VAT and 1% prepayment and 20% TOI as well. And next one about arbitration letter 30 days. Is it 30 days from the company receive or on the date on the letter? And the 30 days is working day or normal day. So the 30 days here is for the 30 day after you receive the notice tax reassessment, not the date of the notice tax reassessment. So when your staff or you collect the notice tax reassessment, you have to be careful with the signing date of receiving the notice tax reassessment. And that date will be the date that you have to count for 30 days, which is the deadline of the submission of arbitration letter. Based on the Prakas number, if I'm not mistaken, 1470, in that particular Prakas, the deadline for submission of arbitration letter is 30 working days. But for the new tax on audit Prakas issue in 2019, the GDT mentioned only 30 days. So conservatively, the deadline should be counted for 30 days rather than 30 working days under the old Prakas 1470. Based on Prakas 270, there would be not audited file at the same period, right? What about the investigation team already reassess and comprehensive come to do the audit at the same period, issue the tax reassessment again while the notification of investigation issue first. Based on your experience, could you please kindly advise if the taxpayer can challenge and waive the comprehensive tax audit reassessment since their notification issue later than 1 month of investigation team, as well as type of tax audit as same like salary withholding tax or on service. So this question regarding the tax audit, which is conducted on the same period, and the tax reassessment imposed by two different tax audit team, which is from limited tax audit, and the other one is from comprehensive tax audit. Like I mentioned in during the sharing, if your company does not have the gold certificate or silver certificate, your company will be subject to tax audit twice, which is limited tax audit and comprehensive tax audit on the same period. For example, 2020. So in 2020, you might be subject to limited tax audit, and the tax auditor reassess withholding tax on rental, for example. And then later on, the comprehensive tax auditor they will also review your or conduct tax audit on your company for 2020, and they also might find out that your company under declare withholding tax on rental. So they will check if you already paid tax reassessment for withholding tax on rental. They will not reassess the same tax in their comprehensive tax audit process again. So in conclusion, your company will be subject to tax audit twice for the same period. First one is limited tax audit. Second one is comprehensive tax audit. But for the tax reassessment, will not be imposed twice by the comprehensive tax audit team and limited tax audit team. So there is no overlap tax reassessment. And the next question is, if my company receives notification on tax reassessment, can I request the detail or breakdown calculation from the GT? Normally in the tax audit process, you work with the tax auditor very closely regarding this tax audit process. So based on my experience, before issuing formal notice of tax reassessment, the tax auditor normally asks the taxpayer to join a meeting with them to discuss their draft notice of tax reassessment. So in the meeting, they will provide a detailed reassessment. What are the items that they think subject to tax and you did not pay tax? So they are discussing with you. But in case if your company did not obtain that draft tax reassessment working, you can disagree with the tax reassessment, and then you also can request the tax auditor to provide detailed tax reassessment after you submitting the objection letter.
With that, I have another few questions.
Okay.
So yes, please let me take the time to answer those.
Yes.
So for company with proper account record will be exempted from minimum tax. This means the company must possess gold or silver tax pay certificate. So companies that declare their account record under proper accounting criteria in annual TI, but without gold and silver tax certificate will be subject to reassessment and MT. So if the company have received proper account records from the tax authority, they will not reassess on minimum tax. That is the answer. So if you receive the proper account records from the GDT, even though you do not have gold or silver certificate, the tax authority will not conduct reassessment on minimum tax, because under the tax, it will be exempted. But you need to be clear on the time, on the tax year, because in the proper accounting records, like I say, in the tax law, it will be valid for 2 years. So only those years that stated in the proper accounting records that will be exempted from minimum tax. But I would like to also highlight that the tax authority will have the rights to revoke the certificates from the taxpayer in terms of proper accounting record certificates or gold compliance certificate or silver compliance certificate. the tax authority, they have the right to revoke those certificates. And in terms of revoking proper accounting records, you will be penalized. I mean, you'll be demand to pay penalties on that. So another question: company have partner for sell product for Cambodia, and company provide commission or sale discount. So should company has to pay withholding tax, and how much? So in terms of commission, if you pay commission to a company, and if that company registered in Cambodia, and if they issue, if they charge you on the commission with proper VAT invoice, then there is no withholding tax implication. But if you pay commission to an individuals or entities that do not register for tax perspective, then you will have to pay withholding tax 15% on the amount. So in terms of sale discount, it's a different story. We will need to look at the nature of the sale discount. Either it's cash or is it product. So it depends on the transaction to see if it is withholding tax implication or not. So if the owner of this question do not get clear on the answer, you can contact me personally after the meeting. Okay. And another one is, why does the GDT always come up with reassessment every time we do a tax audit, even if it is a company that has fully complied with? So I think it does not always that the GDT always come up with the reassessed taxes under the reassessment. We have seen lots of tax audit that comes with zero tax reassessment. And the reasons that we have that, because those companies really complies. And for those companies that fully comply or not fully comply, depends also on the industry that, like Vidya mentioned, and some gray areas in terms of tax law interpretation by the taxpayer and also by the GDT. So these factors combined, it caused the interpretation between the tax authority and also the taxpayer. So of course it will be having a different point of view in terms of tax implication on certain transactions. So they will come up with the reassessment. But like Vidya mentioned, taxpayers have the rights to object against all reassessment that the tax authority has conducted. And the objection will have to be supported by supporting document, evidence, and also the tax law. So to say that all the GDT will come up all the way with the reassessment, I can say that it's not that way. We have seen companies receive zero tax reassessment from the GDT. I hope I answered your question. The next one is, what document needed to request for proper accounting record certificate from the GDT, and how to apply? Is this a separate request for tax compliance certificate? Yes, it is a separate request. You need to request separately between proper accounting records and tax compliance certificate, or you can request it together, but it does not mean that when you get one, you will be entitled to two. So you can combine the application to request for proper accounting records and tax compliance. But again, it does not mean that if you have proper accounting records, you will entitled to gold status or silver status. Or if you have gold status or silver status, it does not mean that you will entitled to have maintained proper accounting records. So you will need to request to the GDT for both of them. And for the documentation in terms of the submission, there's lots of questions, a lot of documentation that we need to support and provide to the GDT. Let me list a few of them. VAT certificate, latest patent tax, certificate of incorporation issued by the Ministry of Commerce, If you have audit reports, you have to provide 2 years audit report. You have to provide large tax return, payment receipts for the last 2 years in terms of money tax and also tax on income. You have to provide certain sales invoice for the last 2 years also, because like I said, the certificate will last for 2 years. So that is why they request for 2 years. So sample sale invoice and all documentations in terms of tax audit by the tax authority. Either it is limited tax audit or it is comprehensive audit. So if those audit already issue the notice of tax reassessment, you will need also to provide those reassessment to the tax authority. And if you have agreed and or paid those tax reassessment, then you will have to provide those payment receipts. And if you request for installment, you will have to provide approval from the GDT on the installments. And if you have paid those installments, you will have to also provide the receipts of those installments to the tax authority. And another question is, do we have any accounting software that can provide proper accounting records? So I think it's two different stories here. In terms of accounting software, we have lots of accounting software that can provide accurate and also comprehensive financial reports and financial statement. You can also use QuickBooks, P3, and other very high comprehensive software like SAPs and everything. But in terms of software that provides accounting records, it will not, because it depends on how the people who use that accounting record. And the way that we can have proper accounting record is only to request from the GDT to confirm. So the GDT will not confirm based on the software. The GDT will confirm based on the tax declaration and based on the accounting statements and also other supporting documents that you would have from those software. So I think that there will no account software that can produce proper accounting record. All software can produce accurate and comprehensive reports and financial statement, but to get the certificate, it must come from the GDT. So this is the questions I have with it so far. So if you have any questions on tax audit, I think you may look at it and then try our best to answer our audience here. Thank you.
Okay, thank you, Tom. So we still have some more questions regarding the tax audit. The next question is there a list or a kind of all decided tax case that went to Tax Arbitration Council or court together with the facts of the matter and rulings? In many countries, there are such published a kind of decided case serve as guidance for public knowledge and practice. So in Cambodia, we do not have those information. Is not available for the public because the tax audit reassessment is a confidential information of most companies, and it might affect the company reputation and also performance. So again, in Cambodia, we do not have that document available for the public. And can explain under what circumstances will be regarded as obstruction of tax law. Like I just mentioned, for the obstruction of tax law, you can refer to Article 128 of the law on taxation. There is a list of the actions that consider obstruction of tax law implementation. So, like I shared a moment ago, some example of obstruction of tax law is that you do not maintain accounting record properly. You do not issue the tax invoice to the customer as required by the tax regulation. You maintain the accounting record or the fake accounting record, and you do not provide the accounting record to the tax authority as requested, and many other things. So for this one, you can refer to Article 128 for other points. And the next question is, normally the tax auditor never reassess with additional tax at 10%. Please advise. I can say that even in the tax regulation, the additional tax or penalty rate clearly mentioned at 10%, 25, and 40. But in practice, the normal rate that the tax auditor imposes is 25%. But from my experience, I also have seen the enterprise audit department impose the penalty at 10% as well, because the underpaid tax was very insignificant, very small. So if the reassessed tax amount is very small, there is a chance or likelihood that the tax auditor impose penalty at 10%. But in most cases, 25%. Next one, if company A got tax penalty at rate 25% on withholding tax, VAT of about 1,000, but we see the abstraction $500 US more. Do you think the taxpayers should debate on this 500 or not? So whether you object or debate against this penalty on obstruction of tax law, you need to understand the reassessment basis from the tax auditor first. You need to check why the tax auditor imposed this penalty of $500 US. And if the basis using the basis that the tax auditor used to impose this penalty is not reasonable and it's not true based on your actual circumstance, you can object to this penalty by providing a proper justification as well as with the enough supporting document for this one. However, if in the case that you really obstruct the implementation of tax law under Article 128, I think the chance that you can win in this reassessment is very low. So in conclusion, you need to discuss in detail with the tax auditor on the basis that they used to impose this penalty. The next question is the tax penalty, for example, 10%, 25%, are imposed on the basis of individual tax having been underpaid or the total underpaid amount for the reassessment of the period? Normally, it is based on the tax, VAT, withholding tax, or income tax. It's not based on the whole total amount of the tax reassessment for the period. Next question: what if we have expense from last year that we adjust this year with retained earning? Is it possible to challenge for retained earning different from last year? So if there is such adjustment, I think normally it arises from audit adjustment. So if such adjustment based on the audit adjustment, you can justify to the tax auditor by providing the audit report together with audit adjustment working to the tax auditor. And from my experience, the tax auditor also accept this explanation, as long as that adjustment is not imposed or pose any tax exposure. Next question: how is income from tickets sold outside of Cambodia in case of airline business source? I think this question is not so clear. I think for this question, how is income from tickets sold outside of Cambodia in case of airline business source? For this one, you may discuss with me after the webinar because I think I need to clarify further about this question. For related party transaction, can the company provide free loan interest of amount due from or advance to related party for support their operation? How to avoid any tax issue related to this transaction? From 2014 to October 2017, under the instruction 151, the taxpayer were allowed to have the zero interest loan between related party. But after the introduction of transfer pricing rule in October 2017, and subsequently the Ministry of Economy and Finance also issued the prakas on the rule of determination of interest expense and income between related party. The taxpayer in Cambodia are no longer, the taxpayer in Cambodia are required to charge the interest for the loan between related party at market rate. And under that prakas, the taxpayer also required to have a supporting document to prove that the interest that they charge between related party was at arm's length or at market rate. So from that, we can say that the GDT is no longer allow the taxpayer to have a zero interest loan between related party. But if you can justify that zero interest loan is the market rate, you have to maintain a supporting document to support your justification. But I think in reality, there is no way that in the market, the bank charge zero interest for the loan to their customer. So in conclusion, I think there is the GDT does not allow the zero interest loan between related party anymore. The next question, my company joined between Cambodia, Thailand, and currently we have a CAO, Chief Accounting Officer, from Thailand to support accounting in Cambodia. But CAO is not subject to be a staff of Cambodia, our company in Cambodia, support by online from Thailand. And Thai side not charge any fee for this supporting to company in Cambodia too. So is there any problem or not? It's subject to salary tax avoidance or not? So like you are aware, under the tax on salary regulation, there is the criteria for taxpayers to use to judge whether the one particular person is their employee and subject to tax on salary or not. So in case if the CAO is not meet that particular condition to be the staff of a Cambodian entity, there is no risk of tax on salary avoidance. However, when the Thai entity provide the accounting support to the Cambodian entity under the transfer pricing rule, the Thai entity is due to perform the service to Cambodian entity. So when these two entities provide service to each other under the transfer pricing rule, the Thai entity is supposed to charge service fee for accounting service. So if the GDT review and find out this transaction, there is a risk that the GDT deems such support as the sale of service between related parties, and the GDT might require Thai entity to charge the service fee at the market price for this support, and the Cambodian entity is required to withhold 14% withholding tax on that reassess or that service fee deemed by the GDT. So this is the risk. The next one is related to income collected on behalf. In case that company have contract agreement as our income is only from commission, agent fee, and doc fee, and we have obligation to collect on behalf income on behalf by issue tax invoice under Cambodia, and for amount of collected income on behalf will transfer back to overseas principal at overseas by preparing a statement of account as a reference. Does the auditor still can reassess on this? What should we do to let the tax auditor not reassessment on that case as actual company and not get those income because we got only agency fee and the fee only based on contract agreement as principal and agency? So this is, I think, this question is from our participant who is from a logistic company. So like I mentioned during my session, there is still no particular tax regulation for the logistic company yet, whether the collected income collected on behalf of the principal and will be transferred back to the principal subject to tax in Cambodia or not. There is no particular rule for this one yet. However, under the current tax law, when you issue the invoice for the income that you collected on behalf, it might be viewed that that income belong to the company in Cambodia. So when you issue the tax invoice, you are required to charge 10% VAT in that invoice. And when you recognize it as the income for VAT purpose, of course, the tax out income and prepayment of income tax also consider for this case. So from the tax point of view, when you issue the invoice, it should be consider your income. But from the business or the company point of view, it should not be the company income because it's just the money that you collected and transfer back to the principal overseas. And your true income, actual income, is the agency fee. So there is still, as this is the gray area, and it is also one of the hot issue, industrial hot issue in Cambodia. The solution is that I would suggest that you submit a letter to the GT requesting for clarification on this a particular issue, and you can ask them. You can provide the your business arrangement in the letter and request the GT to provide explanation or confirmation whether that income is subject to tax in Cambodia or not.
I have 3 questions now.
Okay. Okay, Tom.
Okay. So, question number 1: our shareholders don't have salary, but we share him only dividend. He also charged commissions from his own company when he found claim. So this payment should record under his salary or as commission expense and withholding tax. It's quite out of the topics for today, but I think we can try to answer this question also. So from my perspective, from my understanding, it really depends on the shareholders themselves, because we need to know if the shareholders as only the shareholders or they also work for the companies. Because if they only refer clients, if they only refer clients to the company and they get commissions, I think that the tax implication is a withholding tax. But if the shareholders also works for the company, I think it will be fall under the salary and will be subject to salary tax. So I think that it would depend on either the shareholder is working for the company or he only refers the client to the company. That is what I think. So the second question, can you share some insights on how GDT may treat funds received from shareholders intended for additional share capital? But as of December 31st balance sheet date, the amendment of the M&A is not yet approved by the MOC. Accounts department on each. It would really depends on how long, from my perspective, it would depends on how long from the time that you get the money versus how long that the MOC will get approved. And also it depends on supporting documents on the incomes that you receive. So if it's through banks and if from the HQs, you got the shareholder meetings approvals say that we decide to inject the capital now, but we need to process the application to the MOC in order to get it approved and revise our MIAA. I think that it can explain to the GDT that it is not incomes, but actually it is capital injections by HQ, and saying that we processing the MOC application, something like that. But if it is very long time, let's say you get the money in Jan and you request for the MOC approvals on the change of share capital in December, I think it is not, I think it's very less convincing to the GDT that this money is for capital injections. So if it is really takes that long times, I think another way is to consider it as loan first. So until you get the approvals for the MOC, then you will convert it to equity. So again, it would depend on the timelines between the actual date that you get the money and also the approval dates from the MOC. And the second one, it really depends on supporting receipts, supporting document on those funds received from the AQ. So if it is explainable, I think that the GDT will accept it. So again, it really depends on how long you will get it approved from the MOC. But still, because as you know, tax audit will depends on, first of all, what types of tax audit that they are conducting. Secondly, teams that do the audit. So because different tax auditors would have different opinions and judgments, and company will have different types of risk. So it's still stand a chance that tax authority will challenge it, but it does not mean that the tax authority will impose directly tax on those transactions. It really depends on the explanation as well with supporting document. So I would say it's case by case. I hope I have answered your questions, and if you still need further clarifications, we can discuss further on that. Personally, you can privately contact to us. The third question is, our companies sell online products. Sometimes products are almost expired, so the client don't want to buy it. In order to reduce loss, we create a sale promotion, example, buy one, get one free. And hearing that we have to pay VAT for 2 units, it sounds unfair. So can we avoid to pay VAT for both products payment, but 1 unit product is okay? So it's quite clear from the tax perspective, and based on the tax law, if you say that it is the free product, you will have to pay VAT on that, because under the definition of taxable supply, under the tax law, taxable supply defined as one of the things is free products. So if you say that it's free products, then it is automatically that you have to pay VAT on that. So I think that if you have in that case, you will need to consider different kinds of promotion schemes. Because in the tax law, there is no mentions on discount. You can provide a discount based on the market value of the product at the time of you selling, because you say that it is expired, almost expired. So the value of those products would be less expensive compared to the one that is just produced or something like that. So to answer your question, if you say that if you buy one, get one free, yes, you will have to pay VAT on that. There is no way that you can avoid it. Otherwise, you will have underpaid tax, and then the GDT will impose penalty on that. But you can consider different promotion schemes like discount or something like that, because under the tax law there is no mention that discount is subject to VAT. So you may consider that, and if you need further advice on how to do it, you can contact us with me or our partner along with that. Okay, so that's all for me for now, because that's the questions I have. So I will look further if I have no question.
Okay, I think we still have 8 minutes more for the Q&A question, and we still have some questions regarding the tax audit. So I will finish answering the question in 7 minutes. And for some other questions that I did not answer today, you can personally contact us by the email or the phone number. So the next question is regarding to group companies. How do we ensure that our transaction is following arm's length? How do we prepare evidence or proof? So under the TP Prakas on transfer pricing, the Ministry of Economy and Finance also mentioned about the what we call a TP method to prove that your transaction between related parties was done at arm's length. And from tax perspective, the GDT did not mention what kinds of document that you have to prepare and evidence to prove that your transaction between related parties were done at arm's length. So in practice, the best document that you need to maintain and support that transaction is TP report, transfer pricing report. So transfer pricing report here normally is produced by expert team who has expertise in this area. So they will study the transaction, and they also will issue the report for the customer. So for our firm, we also prepare this kind of report as well. We have support from international team who has many experience in TP study. So if you need to produce that report, we are pleased to help you with this kind of work. And another thing that you might have is that whether it is very necessary for all companies to produce the TP report or not. For me personally, it is based on the benefit and the cost that you obtain, that you incur to produce the report. For example, if the amount of the transaction is not significant and the tax exposure is not very high, it is not necessary for you to spend $1,000 to produce that report, because the cost and the benefit is not favorable for your company. So besides that, TP report, it based on the kind of transaction, which I cannot provide a general idea on that unless I need to discuss with you and understand more about what kind of transaction that you have with between your related party. So I will provide the idea after the discussion in detail. The next one is for sole proprietorship. Does director have a right to obtain salary as company staff? So from a tax perspective, like I just mentioned in the previous question, there is the condition that a particular person need to fulfill in order to be considered as the staff of the company and obtain the salary from the company and subject to the tax on salary in Cambodia. So if that director fulfill that particular condition, he is considered the staff of the company, and he has the right to obtain the salary from the company. The next question is that if my company is closed and you have a tax debt, as shareholder responsible for the tax debt, because the company in Cambodia normally in the form of limited liability company, so the debt of the company is should be the amount that injected or the capital injected in the company. So it is the liability of the company. But the thing is that when the shareholder of the company close the company has the tax debt and do not settle that tax debt, from my understanding, the GDT will not allow that particular shareholder to register another company unless he settled that debt of the old company first. However, the debt is the company debts, not the shareholder debt, under the limited liability form. Next one, for medium taxpayer, if we do not have employees since the beginning, when there is limited tax audit, whether they will deem salary or not. So again, it is based on your actual business transaction. We need to review your transaction and business arrangement first. Why there is no staff at your company? So we need to review that transaction first before we can provide the opinion on that. However, I can provide a general example that based on the audit experience, the tax auditor normally reassess salary of staff in the company that do not have staff, because the tax auditor view that there is no company that can be operated without staff. At least you have the person who maintain or operate the office, and you have the person who sign a legal document and sign the bank check, make the payment to the supplier. At least you have that staff. So without staff, from the tax auditor point of view, the company can be operated. That's why in most cases I have seen that auditor reassess the salary and impose tax on salary for the company that do not have employee, if the company does not have a proper justification with enough supporting document. I think the time is up now, so the remaining question, I think you can discuss with us after the webinar by our email or our phone call. And I also saw one of some question, which is very big question regarding the merging of the company in Korea and a company in Cambodia. This is a big tax advice or tax consulting work. We cannot provide a very quick answer to that question. So for that merging, we can provide you the tax consulting in detail if you want us to have. So again, thank you for everyone for participating and attending this webinar again. And I would like to express my thanks to the KICPAA and the team that make this webinar happen. And I wish everyone all the best and stay safe during this COVID pandemic. Please keep in touch. Thank you.
Thank you, very gentle. Ladies and gentlemen, due to time constraint, I would like to apologize that our speaker could not address all of your questions. So please feel free to reach out to our speaker and also KICPAA secretary team directly if you have or you need our assistance. To wrap up, I would like to thank our sponsor, Fii Associates Co Ltd, and also thanks to our speaker, ladies and gentlemen, for their sharing. Also, thanks to our KICPAA team for their setup and arrangement. Once again, thank you all for your time attending our webinar this morning, and wish everyone stay safe and healthy. Hope to see you next time. Thank you.